Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Wednesday, July 29th, 2020. Markets are facing a big barrage of news over the next 2 or 3 days, and right now don't seem to be particularly concerned by any of it, as we see all the indices trading higher at this point for the most part. Going through the developments of the next couple of days, starting today, probably by the time you see this, we will start to hear testimony from the leaders of Apple, Amazon, Facebook, and Alphabet, which, by the way, comprise about 33% of NDX and about 15% of SPX. And they're going to be in front of Congress today, and it's going to be very interesting to hear what the testimony involves. In some ways, I think the market's looking past it because the preliminary statements that have come out from the leaders of these companies who will be testifying tend to wrap themselves in the flag, domestic champions versus China. That seems to be playing well in Congress these days. And to a certain extent, I don't think you're going to see the chance for any single one of them to get grilled. So I think the market is sort of looking past that. But the one thing they really can't be there's two things they really can't be looking past. And number one would be the Fed meeting that is later today at 2 o'clock. The statement is released, and then at 2:30, we expect a press conference from Chairman Powell. My read on that typically is the first move that you see between 2 and 2:30 is often the wrong move. Not always. Nothing is always correct. But that logic has tended to work because markets can really get pushed around in that half an hour span because there's not a lot of liquidity. If you've got the chairman speaking at 2:30, how much liquidity are you offering between 2 and 2:30? So markets can get a bit whipped around and a lot of times subject to false moves. So I wouldn't read too much into what you see then, unless, of course, something comes out of Congress that moves the market fundamentally. Remember also that the last couple of meetings have not been friendly to the market. The chairman, I think, has been taking a tack of we see what's going on, we remain vigilant, but you know what? We're not just throwing money blindly at the markets right now. We'll do what's necessary. And to the extent that he sees a rosier picture developing or wants to wait and see what happens on the fiscal front, markets could see some disappointment in that regard. Of course, if he just says we're gonna just spend money wildly like crazy and do whatever we need to, markets will like that. So let's look for a tone. But remember, the last two Fed conferences were followed by sell-offs. So market anticipation can get ahead of itself. And then, of course, tomorrow, those same four companies that I mentioned earlier all release earnings after the close. That's remarkable that you're going to have that much of an index weight releasing earnings all at once. I think markets are taking earnings as a glass half full endeavor. We saw great results from Shopify, and one of my Canadian favorites. But at this point, remember, Shopify is the biggest company in the TSE 60 index, actually, and their sales and earnings really completely outpaced expectations. We saw good results from other companies, Starbucks. Visa, on the other hand, the market was a little more measured in its response, not taking it higher. But AMD is higher. So you have seen some of these companies being able to show good moves. Shopify, I think, may be the most instructive because, like the other four companies in question, one can argue that is priced to perfection. I will say that it's not necessarily indicative of the others for one major reason. I think Shopify is earlier in its growth curve than some of the others. It's just not the same. It doesn't have the same sort of heft that some of these other companies have. Where one of the rules is, if you're just sort of a rule of nature, the bigger you are, the harder it is to grow it at high levels of growth. It just becomes more difficult. As of now, Shopify hasn't seen that, and we'll see if that is the case with the mega caps that we'll be releasing later, which some of which have market caps over $1 trillion. And that's really the feature right now. There's definitely some market lunacy out there. I think I'm like many people and have a half an eye on Kodak, which who knows where it is by the time you see this, but as of now, it's up about 600%. Yes, they got a government contract. It's not clear to me that the stock should be moving at that pace. And those are the kind of situations where if you feel like you must trade them, just don't trade them with any money that you can't afford to lose, because these things have a way of turning around in a hurry. Often do. When you get anytime you get into a parabolic situation, it's tempting to jump on the trend, but remember, these things reverse. They can reverse very nasty and very quickly. So, I have no point of view on Kodak per se. I do have a point of view when I see stocks go parabolic on high speculation, and that is, understand that you are gambling in that situation. The odds could be you could see great returns. You could also be wiped out very quickly depending on how you do it. So don't trade with anything you can't afford to lose completely whenever you see a parabolic situation. And so we have it here. As we're heading into these big market moving situations, VIX, VXN are both actually slightly lower because, again, there's sort of the general bullish tone right now. Markets don't feel the need to be hedging right now. Let's see if that turns out to be true. We'll know within the next couple of days. Have a good one, everybody.